A bad credit score can stop you getting a phone contract, a loan, or even a mortgage. Now, if you've already got a bad credit score, it's much easier than you may think to improve it. Or if you don't know what your credit score is, stick around and we'll give you some tips to increase it anyway. A credit score is essentially your financial reputation. Lenders essentially use it to see how risky it is to lend money to you. In the UK at the moment, there are 3 main credit rating agencies, and each one gives you a slightly different score. For example, with Experian, anything above 881 is considered good, and 961 or higher is considered excellent. And what you can do is you can go on and download the apps, fill out the information, and get your credit score within a couple of minutes. Checking your credit score does not hurt your score. What I mean by that is when you check your credit score, it's known as a soft search. Now, a soft search is anything that just skims across the top of the information but doesn't log anything. And a hard search is different, where a bank or a lender will put on your file that you have applied for credit. Now, once you've checked your credit score, we now need to understand what affects it. Now, there are 5 main factors that affect your credit score, and these are all impacted by your spending, your habits, and how you manage your own money. Now, the first one is payment history. It's all about whether you pay your loans, your bills, and all your credit on time. And that's the key. On time. If you do pay them on time, that's a great green flag. What it tells lenders is that you are managing your money correctly. It says to them, I'm paying my bills on time, there's nothing for you to worry about. But even one missed payment. If you have a phone bill of, let's say, £10 and you miss it, all of a sudden, that's a big red flag. This is because it can sit on your record for up to 6 years. When lenders look at your credit score, that will be in red, and it will be at the very top. Now, the best way to avoid this, or the best way to mitigate this risk, is to set up direct debits. That way, whenever you're owing money to an individual or a business, at least a direct debit covers you if you forget to pay. Number 2 is credit utilization. This is how much you're using of your available credit. Let's say you've got a credit card and you have a £1,000 limit on it. If you're regularly using £900, what that says to lenders is that you're too reliant on borrowing. What lenders want to see is the fact that you can borrow, but you're not reliant on the credit limit. Now, a rule of thumb, only use 30% of the credit limit. For example, if you've got £1,000, use £300. Or if you want to take this one step further, what you can do is pay off your balance before your statement is due. Number 3 is length of credit history. Now, lenders like to see a lengthy track record, and the longer that you've been borrowing credit, the better. So if you've got a credit card and you've had it for a few years, but you don't use it much, it might be worth using it for small payments. Now, it's worth noting that closing old accounts will shorten your credit history, and it potentially could reduce your score ever so slightly. Number 4 on this list is credit applications. Every time that you apply for a credit card, a loan, or finance, companies run what's called a hard search. Now, a few of these are absolutely fine because everybody uses credit, but if you're using these in quick succession over a short period of time, this flags up to lenders and credit rating agencies that you're desperate for money. Now, these can cause a short dip in your score, but within 3 to 6 months, that score is reverted. My advice is to space out applications by 3 to 6 months and only apply when you actually need credit. Number 5 is public records. Now, most of you watching will never have anything on your public record, and it's different to your credit score. Now, these cover serious issues like CCJs, which are county court judgments, which you don't want, also bankruptcies or IVAs. Now, these are major red flags. If you have a CCJ on your account, you're automatically going to get barred from any credit. They stay on your file up to 6 years, and anything within that 6-year period where you're trying to borrow credit, you'll be automatically declined. Now, if you have had a CCJ in the past, for example, it's not all bad news. First, you need to clear that. So it's going to take you 6 years for that to fall off of your account. Your credit score will be low. But you can increase your credit score over time by rebuilding good habits. So in short, pay off everything on time, use less than 30% of your maximum credit limit, keep old accounts open, and avoid CCJs at all costs. Next is how to improve your credit score. Now, the first thing you can do is register to vote. It takes about 5 minutes, and if you're not registered to vote, 1, you should be, but 2, it actually increases your credit score. Now, this won't be by a lot, it might be only a few points, but if you're in the average to good or good to excellent, all of a sudden you get cheaper rates. Number 2 is to get a credit builder card. Cards like Aqua, Capital One Classic, and Tesco Foundation are made for people with lower credit scores. These cards are built for people with lower credit scores that want to build their credit. Normally you get a lower amount to spend on these cards, and it also gives you the opportunity to build your credit score over time. The key to this is pay it off in full every single month. Number 3 is to check any errors on your account. Now, mistakes happen. It could be a wrong address, or it could be a wrong occupation, or a lower amount that you earn. The way that you do this is request a full credit report. Go to Experian, check your credit score, and ask for a full credit report. Then you can challenge anything on there that looks sus. Another way that you can increase your credit score is to use your rent or bills to build credit. Apps like Experian Boost or Credit Ladder can report your rent and utilities to credit agencies. Most of us have a mobile phone and we pay it monthly, but if you pay your bills out of your own account, you can also use this to increase your credit score. Small changes like credit utilization or even setting direct debits up can increase your credit score in the short term. Normally within 1 or 2 months, you'll see that your credit score has gone up. However, real progress happens over the 3 to 6 month period. If consistent over those 6 months, you build trust with the credit agencies, and as long as you improve your habits, your credit score will go up. Now, a strong credit score really does save money over time. When applying for a mortgage, an individual with a high credit score will have access to cheaper products. Most of us in the UK want to buy a home, and when we buy a home, most of us buy it with a mortgage. Now, mortgages aren't cheap. You are essentially taking out £300,000 or £250,000 of credit, and people with a higher credit score will get access to cheaper products. It can also be the difference between being accepted and being rejected. That's a tough one because if you're rejected, it's a hard search. It goes against your credit score, and then you have to spend the next 6 months building your credit score up again. Just this vicious cycle of downward bad credit. Think of your credit score as your financial reputation. Build it, secure it, make sure that it opens doors later in life when you do want to come and buy a mortgage, buy a car, or just go on that holiday. Now, if you want another easy win for your finances, you can check out the top 5 bank accounts within the UK or the top 5 credit cards within the UK, which are listed somewhere around here. My name is David. Thanks for watching.